The Dow's at 50,500. The S&P clears 7,500. It's the eighth straight winning week, but what's ahead? It does not look good for peace in Iran. And that deal is stalling. The Strait of Hormuz blockade is still in force. And Kevin Warsh sworn in as the 17th Fed chair by the narrowest confirmation in Fed history. It's Tuesday, May 26th. I'm Charles Brown, portfolio manager with CB3 Financial, and this is your weekly podcast update. So the Dow closed at 50,580, up 294 points last Friday before we headed into Memorial Day weekend. And I hope each of you had a terrific Memorial Day weekend, remembering those who sacrificed their lives to protect and sustain our freedom. S&P at 74.73, the eighth consecutive winning week. Longest winning streak since December of 2023. The NASDAQ at 26,344, the seventh weekly advance in the last eight, and the VIX crushed from near 30 a month or so ago down to 1659. So complacency is back despite the geopolitical noise, despite crude oil right now on Sunday night as I record this at $91. It just seems like the market is ignoring this, but what's really happening under the surface? So strong corporate earnings. Cisco, that's a surprise. Cisco hasn't taken out lifetime highs in a decade. IBM, Salesforce, all delivering, especially CRM, Salesforce, shocking the market with really strong numbers. And of course, Nvidia earnings blew the doors off again. SoftBank ripped up 20% on the AI halo. SpaceX IPO filing landed, and it's targeting June 12th at a $1.75 trillion valuation. It will make Elon Musk the first trillionaire if this fully is funded and stays above its initial IPO. OpenAI and Anthropic are lining up to go public later this year, so the IPO market is as hot as possible, and this is what is overcoming what you guys are seeing happening in Iran, which is a whole bunch of a nothing burger. We still have log jams in the Strait of Hormuz. We still hear President Trump saying any day now, and Marco Rubio over there saying, well, I'm only going to take a really good deal. It's either the way I want it or no deal at all. Okay, markets are kind of tired of it, but right now, they are still staying very near lifetime highs. But watch out, strategists are drawing on a dot-com parallel with this IPO wave at the highs, okay? It makes sense that IPOs want to come out when the market is really, really strong, but that's not necessarily healthy for their long-term structure to stay above their initial offering price. The 10-year Treasury yield ticked up to a one-year high earlier in the week, bonds telling a different story than equities. So this is why we remained hedged. Just so you guys know, we're going to talk about this more on the June 11th show. I hope you'll put that on your calendar. Some of you have said, you got this options hedging and it really works when the market goes down, but it's kind of putting a drag on our performance when the market is going up. Well, again, this 8 weeks in a row is highly, highly unusual. And just when you think this market cannot go down, of course, is exactly when it's going to go down. So we are not withdrawing, although we have moderated the quantity and the strike prices on our hedging. Again, I'll talk more about this on the 11th of June for the June CB3 Live show. So the framework is on the table. 2 phases. They're going to reopen the strait and extend the ceasefire. And then phase 2, 30 to 60 days of nuclear talks. That doesn't mean nuclear war, of course. It means the enriched uranium turnover from Iran to NATO. And so that's the sticking point. Iran wants authority over Hormuz traffic, and the U.S. says no tolls, no nukes, no way. So the oil reaction tells the big story. WTI, that's West Texas, at $90, nearly down 6% on Monday, and Brent, which is the European standard, off from 126 high earlier in this cycle, the same time when West Texas was trading in the 110 to 115 range. Still, gas prices are near 4-year highs heading into Memorial Day, and we traveled to South Bend to see a granddaughter's soccer game, and I think I paid $5.50, even in Indiana, which has less gasoline taxes than Illinois. So the bottom line, trading peace is a deal breaker if it does not happen, and the market will not like that. So the market right now, I think, has factored in that Trump and Rubio and team, Hegseth and all, is going to get this deal done. The blockade is real and the deal isn't signed yet. So, Kevin Warsh is sworn in May 22nd by Justice Clarence Thomas. No surprise there. Nobody was going to do that except Alito or Thomas. Definitely not Roberts and definitely not Gorsuch, because you know Trump is upset with them. But that's another story. The Senate confirmation, 54-45 on May 13th, was the most divisive chair vote ever. Powell stays on as governor, keeping a low profile if he's smart, but a 14-year veteran like he is, whose vote could be a tiebreaker, is definitely a factor in the next Fed headed by Kevin Warsh. So this sets up a family fight, if you will. Warsh on the record is favoring rate cuts pre-Iran war. But since then, he has become more hawkish. Some people are saying he's even more hawkish than Jay Powell. What's going on with that? Well, Trump wanted his appointee in there and he wanted Jay Powell out. And that's what he's got. So whether they like it or not, Trump and Warsh are joined at the hip, and both of them have to own the decision, one to offer and one to accept the position of Fed chair. The markets are pricing the Fed on hold through most of 2026, possibly even hiking in early 2027. Warsh's other agenda, aggressive balance sheet runoff, narrows the Fed mandate, streamlining communication between the two of them. So my take for our clients, don't trade the chair, trade the data, especially the earnings data that you guys are seeing and that I will bring you up to date on the June 11th CB3 Live show. Inflation is the variable that decides it. But right now, earnings are king and they are really strong. So join us Thursday night, as I mentioned earlier, June 11th. We'll have a deeper dive into the Warsh transition, oil trading, what it means for our programs. Subscribe to us on CB3 Live and keep coming back to be informed, and I hope bring you some comfort on the future of what the market should be like here in 2026. It's turning out to be a remarkably stable year with the unbelievable geopolitical chaos and angst that's before us. Stay with us, stay clear, concise, and committed. That's what we are for you. I'm Charles Brown, and that's the CB3 Financial Weekly Podcast. See you the next time.